We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. This is to respond to a Twitter from I think it's Alysso. We're going to do a bit of a Wyckoff update on Bitcoin. The data used is Bitcoin Bitstamp USD, or the Bitcoin trading from the exchange Bitstamp. So let's just talk some facts first. First of all, what we want to see before we get into the price action, we want to see an advancing trend. Hit resistance, it comes back down, hits support, does some wiggling around, and then carries back up on a stepping motion. So we're really trying to work out, I think we're about step 3 of any degree. So as we know, we've gone from 20,000 down to about 6,000 or 7,000, which is pretty much on support of where it took off. So that's full marks of being healthy, so we can't complain just yet. So we can't say the trend is broken. Okay, so we want to see this type of action. Also important to note, you cannot judge demand and supply when price action is in the middle. You really can only judge demand by how it acts down at support, because that's where the big boys want to buy, and you can only judge supply at resistance, because that's where the big boys want to sell. For retail traders to take positions in between major support and resistance is quite dangerous, because the big boys will push price either down or up to suit your needs. So you want to be very wary and understand where the footprints are, and look at the footprints if you're bullish at support, and be aware that supply does come in at resistance, because that's just the normal course of events. There's some notes down there you can read. Rightio, so what we're trying to do, we're trying to see how our reaccumulation is going on. Okay, so instead of, we haven't got a sell down, we've got a move into price range here. So we've got an automatic reaction, some testing going on. We want to see where the accumulation is at the bottom by support, or is accumulation near resistance, and then we'll get some shakeout action before it takes off. So price action normally will choose a side, either near support or near resistance for its accumulation, depending on how it maps out. So I think we've got a selling climax and we've got an automatic reaction, but as you know, we always go to the chart. We had a rally into the reaccumulation rather than a sell down. Okay. So here we are, here's our rally. We had our preliminary supply here. Where we are there. We didn't really get a buying climax, which goes to show that we didn't really get a buying climax. As you see, the volume's very light. That's because no one was really selling into it. So that's a good. So if you don't get a full textbook buying climax, that means supply is about, but not really there. If you had a massive buying climax here and a high volume, that means supply is really putting its foot down and saying, look, we're here to sell. But it wasn't there, so that's bullish. Some selling came in. As you know, it might involve the Mt. Cox receivers, or might involve the bankers, because bankers were able to go short around this point. Well, that's a coincidence, isn't it? It's been recorded that Mt. Cox receivers were involved in some of these large plunges down here. Okay, just after the bankers got their futures contracts to go short. So, I suppose it wouldn't be too hard to work that a few phone calls were going over the Pacific between Wall Street and Tokyo. So it wouldn't be a bit surprising if the Federal Reserve is having checks to BOJ and talking to the receivers and blah blah blah. I mean, that's all conspiracy theory. There may be a movie about it, but you never know. But it is a massive coincidence, and anybody in the intelligence field said don't believe anything about coincidences, because coincidences do not happen. So the timing is very suspicious. Okay, let's go back to it. So we had our preliminary supply here. Come on, where are you? Preliminary supply there. We had a very weak buying climax, which is bullish because the volume did not come into market. Some selling came in, and here's our first demand stamp. demand stamp here, bang. Got a little mini testing there, little. So we got a demand stamp there on that. Better use a blue bar. Demand stamp, test, weak follow through, more supply came in. Okay, just wasn't ready to go in. Another demand stamp here on those big volume bars you see down here, and you know, a little bit of a test, no follow through, no demand coming in there, and some more demand stamps there, and a big demand stamp, bang, right there. Someone said, right, someone with the big money said, bang, we're in here. And the rest of the market just front run that. They saw the big demand that was at the 6,000 or 7,000 level, and they said, right, we've just seen a big whale on the beach, and now we're just going to follow that up, and that's led the bullishness in the market. I think that was around about February, which is also the bottom of the S&P 500 sell-off. So those are our demand stamps. Now we've got an automatic reaction here, so the volume's not great. So that's just people jumping in on the bandwagon from that big demand point there. Now we've got, and also if you can see that we've got an A, B, C, bit of a weak C is the low volume, which is the market moves in zigzags, and an A, B, C is just a zigzag. But for the short term, what we've got here, if you can see this, quite a bit of volume in that. Okay, so I would suspect everybody else sees that, and you might get some sort of move down to the 8,000 going into the weekend or next week, just to prove that all the selling or whatever went on going on here, that it is true accumulation. Because obviously this is a lot of volume came in the market. It didn't really move that fast, so it wasn't too damaging, but it was volume coming into it. A lot of people see that supply, you know, it has been absorbed, but you probably find we just want to make sure that that's probably dried up, and so therefore you might get a bit of a ping down a bit later, see if any more supply comes in, and it might be a bit of a shakeout to make sure scare all the weekends out. So don't be surprised if 8,000 or 7/8's back on the table. Of course, if it goes to 6,000 there, you really want to see demand pick up there and prove that the buyer that was here is still around to do this, or the other buyers around there. So that's the immediate short term. But what is interesting is that we've got at the moment pretty good support. You know, support line there, 8,000. And I would say the resistance is about 14,000 up there. So I was referring to the diagram about, I said before, is that I believe the accumulation battle is going to bounce between 7, 8, 8,000 all the way up to 14,000 over the next probably 3 to 6 months. So it may accumulate it higher up here, or it may accumulate at the low levels, as I've shown in the diagram. It may be at the resistance, or it may be at the low levels. Either or, I think that's bound to happen. So you can expect choppy action for a bit further on, because that basically means we've entered into the phase B of the Wyckoff logic, because that just, we have to wait to see whether the large traders and obviously the bankers have got all they want to accumulate. Because I think I refer to Max Kaiser's comment, is that when the banks came into play here, they held no quantity of the underlying. So they need to hold quantity of the underlying to be able to, one, manipulate the market and protect their shorts for short covering and what have you. So they have to build up a position in reserve of the underlying. So the best way to do that is have it go down. Oh, and by the way, to have a large seller sell to them, because nobody really sells this. So by the way, it just so happens that Mt. Cox receiver sold about 18,000 Bitcoin, I think it was, don't quote me. So all of a sudden that probably went into the bankers and very aggressive investors. So the question is, when the bankers who are behind the Bitcoin have built up their stake, you'll see that through no more good support coming in, and then that's the reason, also the reason you know it's going to at least the old highs. So without, I believe, hand on heart, no matter how far it gets down here, whether it's going to 20,000 via 6,000 or 4,000, I believe it'll get to 20,000, whether it's in 12 months or 5 years. It's going to go to 20,000 because the bankers have built up a position, and there's no way they'll want to lose it, so they're going to have to get it up to release that position for a profit. And as you can see, most accumulations are around 14,000, 10,000, 8,000. So if they want to bank a profit, they're going to have to get it up there, and they're going to have to build up a situation where the public get in and take the price up. So at the very least, 20,000, 22,000 is, I would say, as good as a Christmas card. It's going to happen. Also very interesting, the type of characters that get involved in investing in Bitcoin. Peter Thiel, I believe, put in quite a substantial amount into Bitcoin, and he was also very lucky to go long on calls and profit from the unwinding of the volatility short. Now, that volatility short's been working for about 5 or 6 years, and all of a sudden Mr. Peter Thiel picks pretty much the day and the weekend and the week where it blows up going long, and he actually buys calls and he profits from, I think he profits 100, 200, 300%. So that is rather large, or rather very, very good picking, or well-timed information coming his way. So just to be a bit of conspiracy theorist here, I believe Bitcoin and cryptocurrencies is a favoured of the, I would say, some of the bureaucrats around the world, some of the central bankers. They actually favour cryptocurrencies, even though you hear they're putting out a lot of disinformation. I believe this is their pathway to a cashless society, but not that I'm a fan of that. But cryptocurrencies is going to be around for a long time. They're not going to die. They're not going to blow up, and somebody can call this the tulip bubble. It's because the world is changing, and we just have to realise that the Bitcoin went up too fast, and it's just got the base and to go a bit higher. So to summarise quickly, we have very large demand footprints. Okay, this volume here is the largest down there. That's a big demand footprint. Okay, we have relatively weak supply footprints. Okay, there's a buying climax, very weak. Preliminary supply, it's pretty weak. No one's really unloading, and all of a sudden the mystery seller, it's turned out to be Mt. Cox receivers. I think you should Google Mt. Cox receivers unloads Bitcoin, and you find a bit of information out. So supply has pretty much come from the weak hands and the receiver. Our demand footprint, we just need to see that the demand footprint will hold at this level here. Whoops. And I think we're going to see consolidation up between the 7, 8 and the 14,000 as it builds a pattern to creep higher. So we can't actually do a point and figure forecast just yet because we need to see a bit more base build, and it's very healthy if the base builds for 3 to 4 or even 6 months further, and then we'll get some acceleration because obviously the market won't be able to hold itself. But you can bet your bottom dollar if it goes up, the bankers or whoever else, the big traders want to slow it down by bringing supply in so they can build up a real coil or a spring and let it explode at their choosing. So very, very bullish. Thank you very much for watching.